Unfortunately, the fastest growing mortgage space in Canada is the alternative and private lending space, because as guidelines become more rigid and more strict, the introduction of the stress test, reduction in the allowable amount of years of amortization that we can now secure for our clients is becoming harder and harder to qualify, and therefore more and more clients are falling from the A space down to the B space, and those that perhaps were in the B space are now falling down to the private space. Now, with that said, even in the past, before these changes came out, it was still typically more advantageous to expense as much as you could, lower that income as much as you could, therefore reducing your income tax, but you're paying a little bit more for your mortgage. You still typically came out in a more favorable position in the end. In the past, they were very rigid. You had to have this, this, and this in order to satisfy CMHC, especially, that individual could qualify for the mortgage. And now CMHC is saying, well, perhaps an unincorporated person may not have access to audited financial statements. So we're going to allow them to use a T1 general in combination with a notice of assessment, for example. We can gross up the income based on that. Or they've been in business for less than 2 years, but they were in a similar business before that, or they have adequate cash reserves on hand to float that mortgage for 6 months if business slows down. So I wouldn't say it's making it easier simply because we're able to be, I'll say, more creative and access more tools to help that individual qualify for the mortgage, or perhaps those tools weren't available to us. Ideally, what we're going to start to see now is more of those self-employed people that really can afford these mortgages are going to be able to qualify for them, put quite simply. So we're allowed to be a little more flexible, a little more common sense in how we satisfy to that lender that individual or that business, that self-employed person can service that debt moving forward. And again, typically those types of common sense underwriting practices were reserved for B lenders and alternative lenders, which is why a lot of self-employed people found themselves going to that space. But it's nice to see that the insurer, CMHC, is now allowing us to use some of those common sense practices on the A lending side as well. So they're going to have access to the same great products that a T4 employee would have with good credit. Have your taxes up to date, be organized, and I'd say another big piece of advice would be to speak to a mortgage broker that you trust well before the time comes that you're looking for that mortgage, so you can kind of put a strategy in place and make sure you're positioned in a way you want to be when it comes time to qualify.